Afternoon, everyone. How's everybody doing? It's Wednesday. It's nearly Christmas. It's going to be the last live stream today. Not worth trading for the rest of the week. And week after, obviously, is after Christmas is always very, very difficult. So, I'm going to make this the last one before the Christmas break. How's everybody's day been? Made lots of money yesterday. Had a good day yesterday. Just over 8%. That was mainly S&P scalping again yesterday. So I had a fairly good month. I was trying to crack the 60% mark. I'm up to 58, and all I've got open at the moment is some S&P. So if we can get a decent push on S&P this afternoon, up to ADR, that will be very nice, because that will take me up to the 60%, which would be lovely. Be a very good December. Decembers are typically quite good, actually, because I don't know why, just everything, all the price action tends to go fairly predictable in December, but quite often not a lot of movement, though, unfortunately. Okay, so this afternoon I'm just going to go through basically the dashboards, have a look, see if there's any opportunities, see if there's anything worth taking. It's been a bit of a flat session so far. The main things that have moved seem to have been some of the yens. We've had some decent movement in the London session. Let's go back down to M15 so we can see a bit clearer. So had some decent pushes. Pound yen specifically is the only one that's nearly got up to ADR. So there's not been any ADR hits so far today. Bit flat on that respect. But yeah, I mean, it's mainly yen movement that we've had. So not a massive amount elsewhere. As you can see, we're range bound on pretty much everything that hasn't got the yen attached to it. So no real movement, but this afternoon we could get some decent movement in New York. We'll see what happens, but it's all starting to calm down now. The volumes are dropping. There's not been a lot of movement really. So hence no opportunities. So really scalping low time frames is all you can do at the minute, as there's not a lot of liquidity. So looking at M5, even minute might be good scalping this afternoon, but I'm not going to really do an awful lot apart from concentrate on the S&P. So ADR hits. There's nothing on ADR today. So the ADR dashboard is what I use to get the measurement of the average daily range of the pairs. And obviously when it gets to its average daily range, those turn into good reversal opportunities. So as I said, the pound yen is the only thing that's really got close today. We just about got up to 100% ADR. Didn't quite make it there, and it's just starting to pull back a little bit now. So nothing there at the moment. New York obviously could take it higher. So we could get some further pushes during the New York session. But at the moment, yeah, not a lot. RSI dashboards. RSI 4 hour is flat across the board. So there was a few things that lit up on the RSI dash yesterday, but they've all kind of pulled back a little bit now. So we had the euro yen, which was close on 4 hour. Not far off. So good opportunity for shorts there on euro yen, but it's not quite up there yet. What else we got close? Pound CAD. So pound CAD is just pushed up. We're just about to get an extension on that one, so it's just about to give an alert. Levels wise, we're looking to come back up probably into this level up here when we had this big propulsion candle put in there. So that is roughly the area that I'll be looking to trade up into. We've got this nice big gap on the 4 hour chart there. That we'll be heading up to, but we're not up there yet. Pound yen, as I said, pound yen's pushed up to ADR today. That's going to give us an alert in a second when the 4 hour candle closes in a bit. So that one will be a good one. Looking for short opportunities on. Apart from that, nothing else much getting there. US dollar yen's not far off. So US dollar, obviously we had this big strong move to the downside, which left these nice big gaps in place, which we are trading back into at the moment. So fairly decent move. Lundy, what is the second window? What, this one on the right here? That's basically the RSI dashboard. So this is the dashes basically. So I have my chart on the left, and I've got 3 dashboards I use: RSI 4-hour, RSI hourly, and the average daily range dash, which show me basically market conditions. And obviously my P&L dashboard. So yeah, so Aussie, US dollar yen. So there's nothing really getting extended on the 4 hours, as I say, and we're going to get a couple of alerts, but everything that's alerting on RSI is literally just about getting to extended levels. So not really levels that we're particularly interested in. Well, not that I'm interested in at the moment. Hourlies. There's a few opportunities on the hourlies. So we'll start with these ones at the top. Aussie dollar yen. So that's pushed up very nicely. We're not up at ADR yet, but we've just got extended above the highs on RSI. So we're up at the 70 level there. Would like to see this push a little bit higher. We got this big propulsion candle here where we started this big sell-off. So somewhere around this area I would expect to start the pullback. We've had a very decent move, little profit take move, but that move there that we had wasn't a decent pullback. So I'd like to see a shallow pullback coming back down to the 38 level, or sort of 50 for a medium, 61.8 for a deep pullback. We didn't get a decent pullback on that, so I think this is still the same move. So if we extend to where we are at the moment, we should be looking for a decent pullback. So somewhere up, if we get up to anywhere around ADR on that today, that's where I'd like to see it get to start a move down. But we have just got extended. So with the hourlies, when I'm looking to switch it over to hourly so I know which one it is. So when I'm trading the hourly RSI extensions, I like to see them getting up to the 75 level. Ideally 70 is kind of the entry level that I start to look at. When we get up to the 75 level, that's when I get interested in them. So pound yen's there at the moment. So there's a few that are getting close. So we'll see if we can get a decent push during the rest of the London session, going into New York, and then hopefully New York will give them a little bit of a squeeze and then start the reversals from there. So Aussie dollar yen is getting close. We are extended, so we should see some kind of pullback starting on that in New York. If not, they'll push it up and then drop it from there. Swiss yen, very nice price action going in at the moment on this one. So we got this level here where we kind of put in tweezer top, double tops. Double tops there. We've got tweezer tops going in right now. So we've pushed up really hard. RSI is just about getting extended on the Swiss yen. We've got lovely tweezer tops going in, loads of rejection at this level. So it looks like a really, really good short opportunity from there. If you look at this one on the hourly, we're completely range bound at the moment, as you can see. So we've got the range lows in there. We've got the range highs here. So we've just been very happily consolidating in that area. Nice area of balance where the market's been very, very happy to trade. We're just pushing up into the highs now. So opposite, we're looking for short opportunities at the moment on the Swiss yen. So very nicely starting to get extended. It's not quite there. I'd like to see it get a little bit higher, but that price action looks really, really good. So we've got big wicks to the upside, lots of rejection going on. Sellers are winning at the minute, so really nice area for it to start to drop from. So good opportunities for shorts on that. Reversal alert on M15. You haven't quite got it yet. So almost on this candle, but if it gives a reversal alert on M15, we might have had one on M5. Yeah, so we just had a reversal alert on M5 in this consolidation. So could wait for a pullback and drop, or just jump in there, or just wait for the reversal alert on M15. But yeah, looking really good. Swiss yen, very nicely extended. Nice bearish price action. But as I say, it's not quite extended enough for me. I'd like to see it get a little bit higher up into the 70, 75 range. Euro yen, very nicely extended as well. We are getting some sellers coming in now as well on this one. We've got nice wicks to the upside on this. So we're getting very extended. Lovely opportunity for a short. The euro is a short. Obviously, we've been shorting the euro for absolutely ages now. So yeah, basically all over this as a short. Although I'm not trading obviously at the moment. If I was trading, I would be all over this as a short. Coming up into this big gap here where we had the big propulsion candle, which started this initial down move. Just get out so we can see it a little bit better. Again, we're in a range here at the moment, so that's really the range high. You could kind of class, it's difficult to pick the range on this one. That's probably the better level there. So we've got nice support and resistance there out of this area of balance that we had previously. So either of these levels, but we're basically up at the highs. So we're short on the euro. So basically that one is primed to come down. So good opportunity at the moment for that one as well. So switch down to lower time frames. Just about to get a reversal alert on that one as well. As soon as you get the reversal alert, you can jump in short on that one. So that looks good as well for this afternoon. But again, this is all assuming that we are going to get some momentum this afternoon. Which one do I like better? Pound yen, Swiss yen or euro yen? Either pound yen or euro yen, personally. Probably. I'd have to say euro yen, I think. Just purely because the pounds have got more chance of strengthening than the euro has at the moment, because the eurozone's really in trouble. So I would say that the euro, obviously, we need just a little bit of strength on the yen. As soon as we get a little bit of strength on the yen, that's going to batter the euro down. So the euro yen is always going to be my favourite. Any euro, basically, as you know, you've been in the live room for a while. I've been short of the euro for absolutely ages. Everything euro, I'm just all over it as a short. And I've made some really good money out of the euro. So that is always going to be my favourite short. And there's beautiful price action going in on the hourly on this one at the moment. So really nice wicks to the upside. Pound yen's looking pretty much the same though. Just starting to roll over. Almost got up to ADR. You've got a really nice level at the highs here. Up there. So if this doesn't turn where we are now, get into the second position up there and wait for the drop from there. Good targets to the downside on it. Again, if you stick a fib on this, we've got loads and loads of room. Back down to 38.50 for a pullback. If this isn't the turning point here, we'll push up to there and then come back down into that gap there, and that will be a gap fill complete there. So obviously the gaps we know get filled. So yeah, looks really good. They both look good. Pound yen and euro yen, either or Swiss yen, But I mean, the more extended, the better, as far as I'm concerned. This is really nicely extended. In fact, I think I've probably got into this one on the EA. You will have done. Actually, no, we haven't quite got the reversal alert on it. We'll be getting into this one. Well, the EA will be getting me into this one in about 8 pips. So, looks good. Matthew, just recently finished the Boocamp videos. Love the trading style, works very well. Thanks so much for sharing the content. No problem. Merry Christmas. That's what it's there for. As long as you take something out of it, that's all I'm after. So, pound CAD. Another short opportunity on pound CAD. Looking to weaken. This one I don't like quite as much. The pound CAD's been really, really slow. As you can see, over the last week, we've put in basically, 250 pips. So 2 ADR move in a week. It's really, 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 really slow. It has left gaps to the downside to be filled, but I don't like this one as much at the moment. The CAD is weak. The pound is weak. This is just kind of in a really slow, grindy uptrend at the moment. So it's been pushing and pulling and pushing and pulling really nice. We've had lovely profit takes all the way. There's not been any of this, whenever I'm looking for RSI extensions, I'm looking for fast moves into those extensions so that we know that when these guys have all been selling like crazy to get price pushed down and manipulated down to these levels, we know that they've got to get out of those positions, and everybody that hits the sell button there to get out of their positions has got to hit the buy button, which causes the opposite reaction. That's what we're looking for. This has just been grindy. This has been buy, sell, buy, sell, buy, sell, buy, sell. It's just been very, very evenly traded, so it doesn't look as good as an extension for me at the moment. So pound CAD is just about there, but it's probably just going to have a little bit of a pullback and then continue on its merry way. Pound Swiss, this is looking a little better. Ignore this candlestick here. This is a broker candle. Just so you know, I'm with Axie at the moment. I've been with Axie for about 18 months. Been very happy with them, but recently I've been getting some really crazy overnights in. Not so much recently, over the last few months. Yeah, some of these candles here and the spreads that they're putting in are getting to the point of ridiculousness. Yeah, we got a 35 pip broker candle put in at the swap. It's half an ADR. It's not acceptable. It throws out the ADRs. So I'm switching brokers over to Robo Forex in January. I'm getting them all set up at the moment. I'm just going to pull all my money out of Axie just because this is happening a lot. There's another one there, look. Massive spread, 25 pips overnight. I know all brokers do this, but I'm seeing it a lot at the moment. Just to let you know. But yeah, so this one obviously, forget this candle here. This is the close of yesterday, and we've had a little bit of a pullback. So the actual move here from low to high, I mean, even that broker candle, I'm going to pick that as the low. We haven't had a decent pullback on this at all. So I think this has got a nice pullback opportunity at the moment, and it's obviously very extended. So you've just really missed this one. Actually, you're just about to get a reverse alert on M15. And on M5 actually, because of that push there. So just about to get an alert on that one. So nice potential downside on this one. Target on it. You're not looking at a massive trade. Somewhere between 35 to 50 pips. So just over half an ADR on this one you should be able to get as a drop. So that looks pretty good. Not as nice as the pound yen though. Just the price action on the pound yen and the euro yen just looks really, really, really bearish at the moment. Pound US is another one. Jacob just asked about pound Swiss. I'll have a look at pound Swiss in a second. Pound US dollar. So very nice extension there. We got really, really good strong push this morning in London. We've come up, we've filled this gap. We've put in a lovely doji and we're starting to look bearish now. My favourite candlestick pattern is the 3-bar reversal, and this is putting in the start of a 3-bar reversal right now. Which basically a 3-bar reversal is a big strong push to the upside, either a doji or a shooting star, followed by a nice bearish move to the downside, usually at least 50% of the up move. So I'd be looking for this candle to close somewhere around there. And then nice drop. US dollar, we're expecting to be strong, but I say this is the week before Christmas. Anything can happen. But obviously as we get US dollar strength coming through, that's going to push the pound down. The pound is weak at the moment. So yeah, it looks like a lovely little short opportunity as well, especially as it's just completed this gap fill and it's pretty much tapped into ADR today as well. And as you can see, as with most of this stuff at the moment, we are just range bound. So as we get up to the highs, we start to scale in short. Got RSI extension at the highs. We'll be looking for trades to the downside. If you get in here and it doesn't hold and it pushes up and wants to come up to these levels, scale in with 1 or 2 additional positions there and get out when the move starts to the downside. By that time, you'll be very, very extended on the RSI, ready for a drop. Usual stuff. So that looks pretty good at the moment as well, the pound US dollar. But as I say, week before Christmas, you could easily get into stuff and be stuck in it for a good week or so, not going anywhere, which is the reason I'm not taking positions this week. I've scaled out of all my positions and gone flat. Pound US dollar and New Zealand dollar yen. So again, another yen pair. All the yens today are moving. So decent push to the upside. Lovely bearish price action going in at the moment. You probably just got a reverse alert on M5 on that. No. Still strong push. So yeah, going to get a reverse alert on this one shortly. We've got a lovely M pattern forming at the moment. Nice reversal pattern. So that looks good as well. Good short opportunity on there. But again, just be a little bit careful. Be with the targets today. Obviously, as liquidity is starting to run out, don't get too greedy. We've had a really good strong push on this one from these lows. So we should be looking to come back down to that level there. Pound Swiss, I wanted to have a look at. Yeah, Pound Swiss short. That's the one that was extended. So yeah, we've already covered this one if you missed it. But yeah, good opportunity for a short. We are just about to get a reversal alert on it, potentially, on both time frames. So just wait for an alert. Make sure we get a confirmation of this break of market structure. So as soon as we get the break of market structure, you'll either be looking for just the drop from there or for a retest and drop. So yeah, looks good. Pound Swiss. Swiss is the fly in the ointment, because with the Swiss franc, money tends to get pumped into the Swiss franc, so and extracted back out. So it's one of those things that kind of moves all the other currency pairs. When the Swissy goes, and it doesn't stop basically for as long as it needs to. So you're expecting some Swiss franc strength really with this one, to be able to push this one back down again. But yeah, looks like a nice potential short opportunity. But we are a little bit consolidatory. It's not the best of the bunch at the moment. I think the Euro Yen at the moment is the best of the bunch. When we get a reverse alert on that one, it's just retesting on M5 at the moment. So when you get a reverse alert on M15 on that one, that would be a good looking short. But M5 is where you would take it. So when we're trading H1 RSI extensions, we enter on M5. So you've just had basically the alert on that, and we're retesting. So it's short from there basically. And look down to these highs of Asia. So that's all there is today. Not an awful lot of opportunity around, apart from the hourlies. There's a few bits on the hourly, but 4-hour extensions, as I say, there's nothing there at the moment. And ADRs, we've got nothing hit on ADR either. So it's just getting to that point of year where everything starts to slow down, and everybody's like, right, it's Christmas, not going to do any more trading. Everyone's down the pub. It's always good. Anybody got any other pairs they want to have a look at? Anything that they're in? Anything else they want to discuss specifically? S&P yesterday. So we had the beautiful bounce off the 72 yesterday. As you saw yesterday, I exited a load of positions yesterday, made a nice little tidy sum. We've got a lovely 72 bounce, and it's holding at the moment. Potentially we're looking for a little bit of a pullback during New York. Similar sort of thing to what we had yesterday. So I think if we get a bit of a pullback at the beginning of the New York session, we should be able to get a rally today. So some kind of pullback and push. I think we got this lovely little area here, which prices, this is a beautiful support resistance. So very nice area there, which we've tapped into a few times. So if we do get a pullback down, that's where I'll be looking to buy additionals this afternoon on the S&P. If I do, but I'm not really that bothered at the moment. So I could close this out really now and just walk away for Christmas, but I'm going to hold it. I think we've got a bit more upside. We have the Santa rally, obviously, which everybody goes on about in December, where we try and end the year on a new high. We put a double top in, obviously, up at the 47.40 level. So I'm hoping over the next 2 to 3 days we're just going to get a push back up and re-challenge those highs. But we'll see what happens. That's what I'm expecting to happen. We don't often break below and hold below the 72. So looks like a really good little spot at the moment. And we've had this lovely bullish engulfing, lovely rejection and bullish engulfing on the daily with the S&P. So so that's my plan for this afternoon on the S&P. So anybody got anything else they wanted to have a look at? Quite a few of the plays yesterday worked out well from the ADRs. So I'm just going into my VPS. Not that one. It's a different account. So yesterday, still got this one position on. This is the H1M15 strategy running, which has been running for a while. Banked a little bit yesterday. Just got this one position on Aussie New Zealand that it's been in for quite a while now. Just sitting there because it's not really moved anywhere. So yesterday's trades, banked 31 on the H1M5. It's not taking any trades today. We banked 0.38% today and 0.5% yesterday. This is the ADR reversals. So we've had a couple of good ADR reversals play out. We've got 3 still running: New Zealand, Swiss, pound yen, odd yen. Obviously pound yen already in that one, waiting for the next pullback. Same with the Aussie yen. So we've got those 3 running at the moment there. Cool. This is the H4M15. This is the trend pullback. So we just got one trade on the trend pullback. This one does tend to take less trades, the trend pullback. So this strategy is basically working off of the 72 moving average on the daily. So as price pushes away from the 72 and pulls back and gets extended above the 60 level on the RSI, we wait for a reversal alert on M15, and then we assume a trend continuation. So if you imagine that being the 72 moving average and you've got the 24 moving average, obviously it wouldn't be that smooth, it'd be something like that. It's basically playing the pullbacks into the 24 and shorting out of there. So that's that one. Not really got any trades, just the one trade taken on the pound yen, same as the ADR yesterday. And we banked 50 on this one today, which is H4M15 in line with COT. So that was just one trade, which was on EuroCAD. So obviously these are all new accounts. So I'm just going to let the EA just play these all out. So these are the ones for the EA which are published on the blog. So I'm just running these live just so anybody has any questions on them. I can show you the P&L, what they're doing and everything. So, but yeah, so that's it really. So anybody got any questions? Anything else they want to discuss at all at the moment? Anything strategy related or anything else in particular? Let me know. Moving into 2022, live room is going to be twice a day, as I said yesterday. So we'll be running the 8:30 session, and we will also be running the 2 o'clock session. So there'll be 2 sessions a day. As I say, the morning one will probably be a little bit lighter and quicker than the afternoon session. The afternoon session, I'm going to be doing some scalping on S&P 500. And obviously I will have the EA running on the S&P 500 as well. Which will be automatically taking trades. I'm just working on a version of the EA for S&P, looking at scalping on M1. So I'm just working out some settings basically with it, just to see what works. At the moment, it looks like M15 RSI extensions and then taking reverse alerts on M1 work fairly well. I need to do some thorough back testing on that over different periods of time. and do some robustness testing on it, but looks pretty good at the moment. So that's, again, it's a position trading strategy on it. And also there's a stop loss strategy that I've been working on as well with the alerts, with the EA. That's also doing pretty well as well. Obviously it takes a lot more loss because it uses stop losses. But yeah, scaling in with obviously larger positioning. So getting in with sort of 0.5% to 1% risk instead of 0.25%. But I'll let you know on that. I'm going to work on that over Christmas. Don't tell the wife. And then see what happens. But yeah, so basically that's all I've got for today anyway. So if you don't have anything else to discuss, I will leave it there for today. And I'll be back. I possibly will come back next week. I'll let you know. If you're not in the Telegram group, come into the Telegram group. And I will let you know what the live room schedule is. But officially, I'm back in January because I don't really want to trade next week. It's going to be very, very light liquidity next week. We've got market closed a couple of days as well. So it's going to be very, very quiet. Jacob, how about the DAX 30 or NASDAQ? Interested in those or just S&P? I just trade S&P. They're the same thing, basically. So you can pick whichever you like. A lot of people trade NASDAQ because it's faster. But, I mean, you look at the two. I mean, it's the same thing, basically. The NASDAQ, obviously, S&P is the top 500 US stocks. NASDAQ makes up a large portion of that, tech stocks. So it's the same thing. NASDAQ obviously has around about 3 to 4 times the volatility of the S&P. So the reason I trade the S&P as a position trader is because it's slower. So I prefer the slower, smoother movement of the S&P on lower time frames. With the NASDAQ, you're going to get in a lot faster. But it does the same thing. You see, you've got the reverse alert in there. It's the same, pretty much the same thing. So you can take your pick. The strategies are the same. You long it, basically. So, you know, whichever you want to use is absolutely fine. They all do pretty much the same thing. DAX I don't really trade as much. I never have. So I just settled on the S&P. Just because I know it, you know, I've been watching it for a long time, and I've been trading this as an investment instrument for quite a long time. So, because it's easy to trade, you know, you look at this thing, it goes up. So, you know, when all you do is you buy the dips. So, there's lots of ways to trade it. Lots of people trade it in different ways. Some people use a 100 moving average, a 50 moving average. Some people, you know, use the 200. The 200, it's very rare that it gets to the 200, but 100 or a 50 are the quite common ones to be used. I use the 24 and the 72 just because it respects the 24 very, very nicely. So when we get pullbacks into the 24, that's a great scaling point. But yeah, strategy is the same on all of them. For the gap indicator, do you consider gaps from H4 time frame only to determine the target? Basically, gaps get filled on all time frames. So all the gaps are. It's probably better to pick a Forex pair. What should we go for? Let's just use pound US. So gaps get filled on all time frames. So whatever time frame you're trading, you can use the gaps as targets. So, you know, it's not rocket science to see, you know, there's a gap formed there, price pushed up, it came and closed the gap, pulled back down, pushed up into the gaps that it created there. It then pushed down hard, created 2 gaps, filled those 2 gaps, stopped, reversed back down, created a gap, pulled up, filled it, pushed up, created a gap, pulled down, filled it, made 2 gaps on the way, pushed up, filled it, made a gap, it's just, that's what the market does. When there's a propulsion move, that propulsion move causes targets within that tend to get filled. If you have studied market profile, if you look at a market profile where you have a volume profile, basically, you'll have something sort of like that. Yeah. So this is the largest area of volume. What these volume areas are where the market participants, i.e. the big banks, institutions, are building positions. We call them consolidations, yeah, or balance areas. They're areas where the market is happy to transact and build a position. And what tends to happen in these areas is as soon as the market or the main market participant that is going to move the market has built the position as they want it, they will then shift price. Yeah, so for example, this one here, where there was a load of volume, if it moves to the downside, what price will tend to do at some point is trade away from that, maybe to the next area of volume that we had previously, and trade back up to that area. These sellers here will tend to defend that area and sell again and push price further back down to where they want it to go. So what we see in the market is things like this. Yeah, there's a consolidation and a push, which creates a propulsion candle. And that propulsion move where they're sending price in one direction gets traded back into, and then the buyers buy again. Yeah, so that's all that's happening, is these areas are getting defended. Sometimes, like here, they made a consolidation and a push away. You can see it traded straight back into it and back out again. Let me just move the drawing off and zoom in a bit so you can see what I'm talking about better. So here's a good example. So we got this area in the Asian session. That was the first propulsion move, and then we had another propulsion move there. Price traded back straight into it, and the buyers went, no, we're buying. Bang, and off it went. Yeah, doesn't always work. It gets crashed through, and you scrap it, ignore it, and you move down to the next one. And if that doesn't hold, you scrap it and ignore it. So that's basically, it's supply, demand, support, resistance. It's just areas where price likes to trade, but the gaps, you can see it on the chart. We've just done it today, look. Yeah, propulsion, fill. Yeah, it's just how the market moves. So the gap indicator basically is this not so much a strategy, but this sort of principle was sort of discovered or created by a guy, I think his name's M.A. Perry, and he calls them wide range bars. A lot of people call them propulsion gaps. I mean, whatever you want to call them, they're basically propulsion candles where price pushes hard in one direction and it doesn't come and trade back down into that area. So what it does is it pushes hard and then it might trade back a little bit and push hard again. And we have this gap left with the propulsion candle, and that is all this is doing. Yeah. And these are areas of interest because what these show us is this is where the main market participants started their buying process. So we know there's a big volume put in there. And if they trade back into that volume, it will quite often get rejected. If it doesn't trade back to that volume initially and they push away, when the sellers take control, they will aim back down for these areas. And this is why we see them over and over again getting targeted. And you switch to any time frame and you'll see exactly the same thing playing out over and over again. Yeah, the gaps get created and they get filled. Sometimes you get big ones left where price can't get back to them because the market is just too strong in one direction. Eventually, though, you will find they'll get filled. Like this one here pushed down, came back up and filled it. But the reason it pushed down was because it was filling this gap and this gap. Yeah. So yeah, pick a time frame, any time frame. You'll see them playing out over and over again. There's a great example there. Look. Yeah. Volume comes in, retests it, pushes away from it, all the way up, comes back and fills it, pushes away, comes back and fills it. Yeah, there's one here, bang, pushed down, pulled back and filled it. Yeah, we got one big one up there that hasn't been touched yet, but that's because the US dollar's been strong, the pound's been weak. There's too much selling pressure. So you get these, they just don't get back to them. They get orphaned. But these are great areas to look for trades. So as price pulls back into these areas, look for positions. So price is pulling back into there on H1. So if you mark that zone on the hourly chart, drop down to M15, reversal alert. Yeah. So this is the zone that we just drew on the hourly chart. Yeah. Drop down to a lower time frame. Got a reversal alert. Take a short. But personally, I've always used support and resistance. They're my my main factors that I use in my trading. So I'm always looking for support and resistance zones. Yeah. So just draw a support and resistance everywhere you see a peak and a reversal. Yeah, you draw support and resistance, and that is what I use primarily when I'm trading and when I'm planning my trades. So getting short there because it's a good support resistance zone that has been respected multiple times. If price comes back up to there and gives me a bearish reversal alert on a lower time frame, I'm in short. And if we get extended on RSI, that's the confluence. Yeah, so on a strong push, I want to see the RSI showing me that there's been strength into that move and rejection. That's what I use predominantly, price action at support and resistance. That's really the key to everything. You know, support and resistance is respected. Price has a memory. Every time it comes back to these areas, it rejects them. Or it doesn't, or it crashes through. And if it crashes through, that support no longer holds, it becomes resistance. So next time we get up to there, and there's a gap, we'll be looking for a drop. So when I'm position trading, and when I'm planning my trades, I'll be saying, right, I'm going to get in short here. Let's say, for example, let's pick pound yen. So pound yen. So I'm going to get in short here because we're extended on RSI. Let me just clear that chart up because it's a bit of a mess. My template's got a load of lines on it. Never mind. So yeah, let's say I'm going to get in short here. What I do is I will plan my short. So I'll get in short here and I will say to myself, if this doesn't work, this trade, because we're extended and I'm expecting a pullback, where is my next level? My next level is going to be at the most recent turning point, which I'm expecting to act as resistance. So if that doesn't hold, I'll scale out and go, right, if this level here doesn't hold, where am I next likely to turn? So I'll look at another area where price has reacted multiple times in the past, which is here. So we had a nice reaction there. And you can see we've got a nice area of balance, which is sitting on top of this support. So this is massively supportive, this area here. Look, it just bounced off, bounced off, bounced off, bounced off, continually bounced off, finally broke, acted as resistance, 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 finally broke back through it, crashed into it, support again, finally got through it. And now if this isn't the turning point and we don't come up, take liquidity and run from there, where am I expecting it to go? Here. Confluence. We've also got a gap. So I'm going to short it there, I'm going to short it there, and if that doesn't work, I'm going to short it there. One of those three will work. By the time, if that does push up to there, RSI is going to be so exhausted, it's going to need a massive profit take on that move, and I'll get out. And that's basically the whole position trading strategy. You look for areas where price is likely to react, and that's where you get in. Am I still using Hedge M5 strategy? Yesterday you showed all set files on Robo. No, I don't use Hedge M5. The reason being is because the other strategies are safer and more stable. Hedging is a high risk strategy. It works really, 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 really well, but you've got to manually intervene with it, because you will find that when you're hedging, you're basically trading chop. So if you're hedging and the market is choppy like this, you'll have no problems at all. If you're hedging and the market decides to squeeze, you're going to be in big trouble. And you're going to be scaling in and you'll never get out. Yeah. So you need to be able to jump in and manually manage these positions. And it's a lot more maintenance, high maintenance. It banks profit regularly, hedging, until it gets into a squeeze, and then it becomes difficult. So personally, it's not my way of trading. A lot of people asked me for a hedging strategy. So I built one in the A that worked. But it is more dangerous, and you do need to manually intervene with it. So you're better off with H1M5 mean reversion, H4 M15 mean reversion, and H4 trend pullbacks. So the H4 trend pullback strategy is basically you take trades, green you go long, red you go short, based on the 72 daily moving average. You take pullbacks when we pull back into it, in line with the trend. So those are the three main strategies, and those are my bread and butter. That's what I've been trading for years, mainly H4 M15. But H1 M5 I'm finding is also just as good, and a little bit faster. But you're much safer. Going back test it. If you look at a chart, Euro Swiss is not a good example. Let's just pick something, US dollar CAD. If you use this as an example, the more extended you get, the better on the RSI. So I prefer 75 extensions and 25 because the move to get there is a lot stronger. Yeah. And the difference between the 68 level, the 70 the 68, 70 and the 75 level is quite dramatic. If you look there, you would have got in on a 70. On a 75, you wouldn't have gotten into about there. So that is your drawdown rather than that on H4. The lower the time frame you go, the more potential squeeze there is to go against you. But if you're trading in line with the COT report, which is why I use the COT report, you're going to be a lot more stable because you're only getting in line with where the market is anticipated to go. But it literally is buy low, sell high, yeah. And that's all you're doing is you're waiting for the market to get exhausted. And it's all about the buyers and sellers, yeah? So you're getting down here. This is a good example of one you've been in for weeks. You'd have scaled in there. You scaled in maybe 3-4 times. Probably would have got out there. That would be your exit. If not, obviously you got out somewhere up there. But you'd have got in somewhere around there. Got out there. You'd have got in somewhere around there. Possibly out there. If not, you'd have to wait for that move to get out. You can see I've just taken a load of trades there on that one. So up there on H4. So that was my scale in and out. But it's literally as simple as every time you get a big strong push without a profit take. So market structure obviously is that. Perfect market structure does that. Yeah. Support and resistance. Support and resistance. So we're moving up, we're pulling back. We're moving up, we're pulling back. This is a buy and a profit take. A buy and a profit take. A buy and a profit take. That's perfect. What you get taught in textbooks, which doesn't happen in real life. The RSI, when it gets extended, shows us that we've had a big strong move. And what I'm looking for is not just the fact that RSI is extended. I'm looking for the fact that RSI is extended and it has not had a profit take. It's due. That's when you get it. So if you find that RSI is extended after having done that, not the best trade in the world. If you find RSI is extended after having done that, perfect. Because the market cannot sustain that. Everybody that hit the buy button here to get out of their trade has got to hit the sell button. When everybody starts to hit the sell button to get out of their trades, everybody goes, oh, it's coming down. I'm also going to sell. You get double the strength. Therefore, you get that big like elevator shaft move. And that's where we take our profits. So we're waiting for the market to get extended on the 4 hour. And the 4 hour, the reason I use the 4 hour is because the 4 hour is more stable than the hour, which is more stable than the 30, which is more stable than the 15, etc., etc. The lower the time frame, the less reliable your any signal strategy will be. So I trade H4 time frame, but I enter on M15. So I'm looking for the reversal alert on M15 when the H4 is in the right condition. But as I say, H1 as a condition and then M5 as an entry is also good. Today's very last question. For H4 mean reversion, you have set one side direction using COT bias on all pairs. So do you need to update it every week whenever the COT new data is released? Yes. So if this is this set file here, this account is trading all 28 pairs with a COT bias. Yeah, this is a bit of an experiment, this account. Normally, as you know, if you've watched the Boocamp, I limit my exposure. So that's why I have the exposure here. So I don't want to get overexposed more than a couple of times in one direction on one individual currency. Because if we get a squeeze, you're obviously going, if I was short 5 US dollar positions, I'm actually exposed on the US dollar 5 times. If the US dollar pushes, that's going to hurt me way, way, way more than if I've only got 1 or 2 positions on. So I limit my exposure. With this account, it's basically trading in line with COT on all 28 pairs. So it's a bit of an experiment, really, as much as anything, for data gathering for me, just to see how it works. But it will get into some squeezes, I'm sure, because it's going to be trading a lot of positions. But yes, you've got to update it on a regular basis. But the COT report doesn't change that often. So, this is looking for short signals because the pound is a short and the US dollar is a long. If the pound flips long, for example, and the US dollar stays long, that will be switched to both because I will trade in both directions because there's no strong directional bias on one or the other. So, with the COT report, this obviously updates every Friday evening. My website updates on Saturdays with the COT report, Saturday mornings. So you only got to check it once a week. And basically all I do is at the weekend on a Saturday or Sunday, if there's no change, there's nothing to do. If one flips, then I'll look at, let's say, for example, the pound flips long, then I'll go through and whiz through all the ones that are pound crosses, and I'll switch them accordingly, either to a long or to a both, depending on what the COT bias is on the other currency that it's trading against. So yeah, either or really. But yeah, it's just something that I will do at the weekends. News this afternoon as well. I didn't cover news this morning. I should have, at the beginning of the stream, I should have done. But we've got news GDP at 1:30, which is in 6 minutes. And then we've got consumer confidence and home sales this afternoon at 3 o'clock. So if we are going to get any volatility, likely to be around there. Otherwise, it's going to be waiting for New York Open, basically. So. And then tomorrow we've got CAD GDP and PCE for the US dollar. So, and then obviously that's it really. But we're Christmas Eve, so I'm not expecting a lot of movement. It's either going to be one of the other, isn't it? You're either going to get no movement at all, or you're going to get massive slippage. Either way, you don't want to be involved, unless you're on the right side of the slippage, which is obviously very nice. But yeah, might as well flip a coin. So yeah, so GDP 130. We'll have a look at that in a minute. We'll have a look at the US dollar. But does that answer your questions on those? I wouldn't recommend trading every pair basically with the EA. If you're position trading, if you're using a stop loss with any strategy, it doesn't matter. You can trade what the hell you like because you've got a limited risk. Part of position trading is you've got to manage your risk in a different way. So you're managing your risk as a portfolio of positions. Therefore, you have to manage your exposure. Exposure is incredibly important. If you overexpose yourself to one currency, you're going to get hurt. You're going to get squeezed. Equally, obviously, you can make an awful lot more money. So it's horses for courses, isn't it? But I always try to limit my exposure to two currencies at once as a maximum, which is why I trade semi-automated with the EA. So when I'm using the EA to trade my manual account, I basically just put the EA on when I want to get into a position and let it scale in for me as necessary. But, that's part of what I show in the bootcamp, how I manage my positions. So I'm looking at this, I'm looking at my drawdown on a daily basis. And obviously the entries that I'm taking are so tiny. If we had something squeeze 3-4 ADR against me in one day, it's not going to hurt. It's going to go into drawdown, but, this is what all the no stop loss haters out there are like, oh, you can't trade without stop loss. And I totally agree. If you're taking 1% risk on your account or 2% risk on your account, you're absolutely crazy if you don't use a stop loss. If you're trading with 0.1 and 0.2% of your account and not using a stop loss, I don't care if it slips 3 ADR against me. A worst case scenario, I might go into a couple of percent drawdown. Everybody trading with 1% risk on their account, when they lose 2 trades in a row, they've lost 2% of their account. I've got nothing lost, have I? I've gone into 2% drawdown. At the moment, I've not lost anything on the S&P. Yeah, I'm in 3% drawdown on my account. I haven't lost anything. I've made 57% this month. Right now, I can shut this out and go, oh, well, I'll just take 54% this month. It's a different psychology, a different mentality trading this way, which is what everyone needs to get used to if they're doing it. Okay, so news is up in 3 minutes. Hopefully that answers your question on that bit. The indicator I'm using on here as well, the gap indicator that I used to use, has been removed from the market for some reason. So I've gone back to using the, it's called WRB Hidden Gaps, which is the one, I think it was made for M.A. Perry's strategy. It's worth going to look up his website and have a look at how the theory behind them. But at the end of the day, let's say they're propulsion candles. But this one that I'm using now is the WRB Hidden Gap. So the only difference with this one and the one I used to use is you can't force it to use a specific time frame. So I really used to like having M15 gaps only on my charts. But basically now with this one, obviously what you need to do is kind of just verify that gap is actually still there. So if you draw in a gap that you see, for example, there from Monday, when you go down to a lower time frame, M15, which is what I tend to use most of the time, you'll see that that gap actually isn't as big as it looks on the hourly chart. It's actually only... Oh, just move that out of the way. It's only that big, look. So you just need to do a little bit more manual checking. But, they're respected the same way as anything else. The gaps, yeah, they get filled. So you can use the same time frame as you're viewing. Doesn't really matter. Okay, 1 minute's news. So this is US dollar GDP. Odd CAD, we just had an ADR hit. First one of the day. Aussie dollar CAD. Pushing nicely. Is that Aussie dollar or is that Canadian dollar? Looks a bit more like Canadian dollar. Well, it's difficult to tell really, but Aussie dollar CAD's hit to the high. So let's watch the US dollar. News is out. Not really. Look at these spreads. Awful at the moment, isn't it? Terrible. No movement on the news. Bit of a dead duck. 2.3% higher than expectation. Yeah, you'd expect to get a decent push off of that, wouldn't you? Yeah, we'll see. You might get a delayed reaction to it. Yeah, as I say, I don't think the market. There's so little speculative trading going on. I think this week, you're not really going to get an awful lot of kick off of the news, unfortunately, at the moment. But yeah, flat as a pancake. Look. Nothing of interest. So so all I'm doing this afternoon basically is going to manage these S&P positions with the view to hopefully getting a continuation push. You can see where my TPs are. Just looking to get out with a decent profit on these. And then that'll be me done for the year. And I'll basically be just closing this account down. And I'll be moving over to Forex, and I'll have a dedicated S&P scalping account in Forex, and I'll have also a dedicated account for the EA just to trade auto for me as well. So looking for that to produce somewhere between 40 to 60% a year, which is what it's been achieving quite nicely in backtesting. So and obviously I have all that monitored so we can watch what goes on. But yeah, so afternoons, 2:30 New York Open, I'll be scalping next year. And we'll look at some other strategies as well. There's lots of strategies to do with scalping on the S&P, but at the end of the day, you buy the dips and you wait for it to pop. So it's how you buy them. It's obviously how to maximise your revenue out of those. So. Okay, so that's all I've really got for you today. There's nothing else, as I say, going on at the moment. It's all very, very quiet, very tired, the market. So just manage any positions you've got. Get as flat as you can before Christmas, if you can't get completely flat. But obviously next week we have got movement next week, but not as much. Actually, let's just have a quick look at the news for the following week. Nothing. So it's bank holiday Monday and Tuesday. Wednesday and Thursday are trading days, and then Friday obviously is New Year's Eve. So looks like really liquidity wise we've got Wednesday and Thursday next week, so just no point. Have a week off, go and chill out and relax. That's what I shall be doing, and then I'll be back on Tuesday the 4th of January is the first trading day back, hopefully then we'll get all the liquidity starting to fly into the market. So new year, new start, basically back to milking it on the 4th of Jan. So that's it for me. Have a good Christmas, have a good new year. I will be in the Telegram group over the holidays. Never sleep. I will be watching charts, doing back testing, stuff like that. You can never leave it alone, can you? It's one of those industries that just grabs you. I will be back on the 4th of January, but have a good Christmas and New Year, everybody. Anything you need, come into the Telegram group. And other than that, I will be back 4th of Jan. So have a good one and see you then.